Well, let's go straight to the Infosys numbers. Its third quarter results are out. Rima is standing by now to decode the fine print for us. How did Infosys do, Rima?
Well, Infosys reported a revenue beat while margins have come in line with street expectations. The company has reported a revenue growth of 1.7% ahead of the CNBC-TV18 poll of 1%. This is also ahead of what TCS had reported, which was absolutely a flat growth. So Infy beats, Infy beats on the top line. Margins on expected lines have expanded marginally to 21.3% versus 21.1%. So it's a 20 basis point margin expansion on expected line. So Q3 revenue beat, margins in line. Now on to the most important thing. The company has upped the revenue guidance. The earlier guidance for FY25 was 3.75 to 4.5%. The new guidance is 4.5 to 5%, which means the lower end of the guidance is raised from 3.75 to 4.5%, while the upper end is raised from 4.5 to 5%. The fact that the upper end is raised will give the street a lot more confidence. That said, many on the street believe that the upper end of the guidance would be raised, and the consensus expectation was that the company would revise the full year revenue guidance to 4.5 to 5%. So it's not that it comes as a positive surprise, but the fact they did it reaffirms that perhaps things are improving. Now, a few other data points. The deal wins for the company continue to remain steady. No acceleration, but steady. $2.5 billion is what the company has clocked in by way of large deal wins. Hiring is picked up for the second consecutive quarter. Remember, hiring is seen as a lead indicator of demand improvement. Over the last 18 months, when demand for IT companies slowed, we knew that the employees were cutting back on their overall base. Attrition had cooled off, and the companies were not backfilling the people who were leaving. So the overall headcount was steadily declining. No one was hiring, but now it appears that hiring is back. So for Infosys, it's the second consecutive quarter of a pickup in hiring, and attrition too has, inched up marginally for the company, and it's come in at 13.7%, higher for the third consecutive quarter. So a pickup in attrition is also seen in some way as an indicator of demand, because people are moving on to different pastures. There is demand, and therefore they may get poached. So all in all, it appears to be a good quarter. The Q3 revenue beat will come in as a positive surprise, and it will provide a lot of confidence to the street. And even the other indicators like the deal wins, hiring, attrition, all bode well. The stock, remember, going into the earnings fell. Especially, pull up that, the intraday chart, especially in the last 1 hour or 30 minutes, we saw the stock fall. It collapsed from 3 to 330, and it ended with a cut of more than about 1%. Will we see a reversal of that? Shaji Nair, research analyst at Mirae Asset Sher Khan, is now with us on the show. Thank you very much for joining in. First, if you could just share your initial thoughts on Infosys, and what is it that we should watch out for in the press conference?
Thanks, Rima. Basically, the revenue growth that has come in at 1.7% on a constant currency basis is really good, because I think we, as well as the street, are anticipating close to 0.7 to 1% growth. So for a seasonally weak quarter, this seems to be a good number. Also, with respect to the margins, there was nothing on as such as a headwind or a tailwind. And, the street, as well as we, were anticipating flat margins, and we are seeing that there is a slight improvement actually with respect to 20 basis points from our numbers. So both on those both fronts, it's good. On the deal win part, 2.5 billion is a little softer, because we, as well as this most thing on the street, are anticipating closer to $3 billion on the large deal TCV. So all in all, good set of numbers. Hiring for the second consecutive quarter after many quarters of headcount declines. That's again a positive. Raising of guidance is again a positive. So many positives to the numbers that have come in. And the main thing, or the key monitorable, as we have seen with TCS, HCL Tech, and LTS, is a commentary. The upbeat commentary will surely bring out good participation in the stock in terms of investment going forward. The main is improvement in discretionary spend. The commentary on the improvement in discretionary spend, whether it's going to spread from to other verticals other than the financial services vertical. The company has reported that the financial services sector is seeing improvement in discretionary spend, and this would be team spending across other verticals would be one of the key monitorables that we feel the street will be watching out for.
Quick word, do we expect EPS upgrades tomorrow, Shaji, and a positive reaction?
Yeah, there could be EPS upgrades, possibly because they have raised the guidance. Like I said, importantly would be the commentary on how they see FY26 versus FY25 or calendar year 2025. How do they see that would determine whether EPS upgrades would be, or there would be no change on the EPS part.
Indeed, but so far, at least the commentary from the IT companies does point to the discretionary demand being better than it was, say, 3 months ago. The pipeline for most companies is higher on a quarter-on-quarter basis. And TCS, which is otherwise very shy of coming out and making either a qualitative or a quantitative statement, did say that FY26 should be better than FY25. So far at least, the noises that we've heard, the sound bites from IT companies has been positive. Prakash Diwan is also joining in. Prakash, share your initial thoughts on Infosys' numbers.
So I think the numbers are quite positive, especially, as anticipated, there has been the upping of the higher end of the guidance, which also is something which can propel a little bit of a virtuous cycle for the next full year, which can translate into EPS upgrades as we go along. And then, as you rightly said, you combine this with the environment, the commentary on the environment from the likes of TCS, even, players like L&T, which have, L&T also, which have been struggling for a while. They've also started kind of showing some sort of a turnaround. So I think it's moving beyond the BFSI vertical. The confidence comes from the fact that that's the vertical which is the lion's share of the revenue, which has started chugging along, and the others will also catch up. So, for instance, retail, and we'll often wait to hear from the management in terms of how high tech does, how retail does. But if those things look up, these numbers definitely pave the way for a very strong re-rating of sorts for all these big companies, including Infosys.
But Infosys has been re-rated relative to, say, a TCS. So in the last 1 year, Infosys is up 18%, while TCS is up 9%, despite TCS moving up after coming out with their numbers. So Infosys has rallied, it has gotten re-rated, it's outperformed its peers, and even valuations, historically at a discount to TCS, is now at par with TCS. So from here on, which one would you bet? TCS, which is also guiding for a pickup and things to improve from here on, or would it be Infosys?
I would still go with the chances of Infy continuing with this. They have had a head start in terms of improving some of their basic metrics, and that improvement will give them much more, stronger traction, especially when the post Trump administration coming in, there could be a slew of contracts getting awarded. So the TCV could probably dramatically improve for Infosys. They're right there to leverage on that growth. Infosys is right there to leverage growth. TCS will probably take some time to digest the improvements that they've seen in the last quarter and consolidate. But I would definitely believe Infy is the one that will continue holding. And the thing about Infy having done well, it's not entirely a re-rating of Infosys on an absolute terms, but it's probably a de-rating of TCS that happened, which increased the delta. But going forward, I think Infosys will continue to march ahead at a faster clip in terms of earnings growth as well.
Just two things to point. One, the guidance this time has been boosted also by the Intech acquisition. We presume the upgrade also takes into account the Intech acquisition that the company did, which analysts expected to add about 20 basis points. Now, from the management, we will find out if the upgrade in guidance is X of the acquisition, organic as we call it, or does it take into account the acquisition? So that's point number one. And secondly, remember in Q4, in all probability, the wage hikes kick in. Last year, the wage hikes were in Q3. the company's wage hikes were effective 1st of November. This time they didn't give it in Q3, and now reports are suggesting that the wage hikes come in January, February, March, depending on the level, which means in Q4 there will be a wage hike impact on the company's margins, and the company in a way has deferred its annual wage hike cycle. It's not come in after a period of 12 months, but a little longer, maybe 14, 15 months. So Q4 margins perhaps will have the impact of wage hikes. So Shaji, when you speak to your investors about IT, what is it that they tell you? What is the feedback so far that you've got from the Q3 numbers?
So with respect to the Q3 numbers, the investors are a bit skeptical because currently there are a lot of events that are taking place. Firstly, with respect to the rate, the data that is coming out from the US, which is bringing about volatility. Today we had, yesterday night we had inflation data on inflation, which is seems to be easing, and it's giving out good prospects that there would be rate cuts going ahead. So, but investors on the street are a bit skeptical with Trump slated to take assume office on 20th, and the restrictive policies with which he could be coming could have a bearing on the markets as well as on the IT stocks as well. So right now, investors are a bit skeptical on entering the stock.
Thank you very much for sharing that viewpoint. For more clarity, we will have the management speaking to the media at 4:30 p.m. So all eyes will be on the top management of Infosys. But a quick wrap out, Q3 numbers are strong for Infosys. The company beats street expectations with a revenue growth of 1.7%, raises the full year revenue forecast for FY25 to 4.5% to 5%. Q3 margins in line, and the company holds on to its FY25 margin guidance of 20 to 22%. Hiring is picked up, deal wins is steady, attrition too seems to be on the rise, but within the comfort band. Thank you, Shaji and Prakash, for joining in. With that, Shireen, it's back to you.
Rima, many thanks for joining us. That was Infosys for you, but let's move on.